Good morning, trading world. It is May 11th, 2022, and this is my pre-market and technical analysis for day trading the SPY. We are sitting on the edge, and this report could knock us off the edge or kick off the short covering rally. CPI holds the key for what happens the rest of the week. It's no secret that I was and still am looking for a further drop below 397 and a sharp V bottom after some real panic selling. A real bear market rally is going to feel different from where we are now than it would coming from 5% below the 403 level. Everyone feels the rally building. And this is the dangerous part. How many people get roped into the squeeze first? In position allocation, it is important to realize the range you are in as to not continue to allocate lots of risk in this same range. If you take a look at the chart here, this is the past 2 days, but we could go back a little further than that. But if you take a look, we've pretty much been in this same range for the last about 3 days. And what happens, people continue to allocate, and continue to put on positions in this range. And what happens is that the more positions that we put on, or the more money that is allocated within this range, it winds this spring up really, really tight so that when we break, there's a super explosive jump. I can't tell you whether that jump is going to be up or down, but because of the capital involved, just know that it is going to be an explosive jump. And so that's why I say that you have to continue to understand your allocation and not put too much money to work or at risk when we continue to spend so much time in the same range. CPI lower than we thought, it could kick off a short covering rally. But overall, the monthly chart is still in control right now, and there is still some downside left to cover on that time frame before we can start to consolidate. With that being said, let's get to the key levels for the day. All right, here we are with the key levels of the day, starting on the resistance side. Jack resistance is very powerful today. This 403 to 404 area, it actually does hold a lot of weight. And I'm going to be interested to see when the CPI number hits, whether it breaks us through this 403 to 404 area. Queen resistance is going to be 405 to the 408 area. King resistance is 409 to 414. On the support side, we have Jack support at 401 to 400 area. Queen support, we have 397 down to 395 area, and then King support 394 down to 388. Again, as I've stressed all week, this 397 area is very important. Once we break off this 397, we see a volume spike or bear volume spike at this 397. It could give us an idea that we're about to break off and break through that level, because believe it or not, this is like a very strong magnet, and you can get down to 396, 395, but that magnet still has pull on price action from there. So as long as we're still close, we're still effectively on that 397 area. And I don't think we actually break off of this 397 or that magnet pull until we get below 394. So that's one of the things to kind of look out for today. Because again, I'm looking for some real panic selling to actually take place at some point in time. And I don't think we can get to it until we break off and below that 397 level. The outlook for today. The main thesis is bullish, closing above 399.09 with a projected target high of between 404 and 411. The alternate thesis is bearish, closing below 399.09 with a projected target low of 398 down to 388. The current channel we are in is 416 down to 397. The next major channel down is 397 down to 379. Remember, alternative thesis could be more explosive as more people gather on the bullish side expecting this bounce. Also remember our weekly outlook. It is bearish, closing below the 411.34 with a possible retracement up to that 415 area. And when I think about it, we could stretch out to next week waiting on this V-bottom capitulation moment I'm looking for. Continue to look at market strength to start high, fall, then rally later into the day. That brings us to the scenarios for today. Let's see. All right, our first scenario is our expansive range day structure. We could look to set a decision area, high boundary around the jack resistance level before falling lower. One of the things that I want to stress, a lot is going to happen before market open, which is where we are now. Before the CPI number hits around 8:30, which could give us a drop back down to that previous close, and then at the open we could get a small bounce back off before we take off to the downside and possibly getting that sharp V bottom if we decide to sell off at some point today, bringing us back up and kicking off that huge short cover rally that could take place. But this is our expansive range day structure. Take note of where that previous close is because it plays a big part in it, us crossing through it and also crossing back through it later in the day. So that is our expansive range day structure. There could be a vice versa. There could be a vice versa type probability happening on this as well due to the CPI report, because it could jump us here and we could go here, and from that point we could even see a deeper jump back off into things. Everything is going to be based on this CPI report happening before market. So that's scenario number one. Let me bring up scenario number two. All right. Scenario number two could be our rounded reversal day type structure. We could get a continued push lower toward the queen or king resistance. Support area, and find midday chop around either the queen or king support area. But keep in mind, I am looking for this sharp V bottom to take place at some point if we get that real panic selling. So this rounded reversal day could end up being one big V bottom if the panic selling starts to take place today. So we can have that, and then there's also the vice versa of us having good spark off of the CPI and settling back. So that's scenario number two, rounded reversal day type structure, which could wind up being just one big V temporary bottom. And let me stress that as temporary short-term bottom. All right, scenario number three could be our trend day up structure. We could open gap up, start with a fade back toward the previous close, find support on or before that previous close, then begin the uptrend for the morning. There is also a strong vice versa component for this today as well. We could also end up being a trend down day based on the CPI report this morning. If we get a strong enough kick from the CPI that sends us below that previous close, we could then have a slight rally back after the cash open and then continue that downtrend. And that could possibly give us that V bottom that I'm looking for. And that V bottom could stretch out over a day or so. So those are the scenarios for the day. Again, remember the weekly outlook. It is possible for us to have a retracement up toward that 415 area, but the weekly bias is still bearish, closing below 411. Please understand and know your risk. It is very important right now. I hope this helps. Have a great and positive trading day.